Hey everyone! Welcome to my channel. Investing in the stock market for the first time can seem daunting, but it doesn't have to be. In this video I'll walk you through the basics from opening a brokerage account to making your first trade. My goal is to make investing approachable for total beginners. I'll explain concepts simply and clearly, so you feel empowered to take control of your financial future through the markets. Investing may seem intimidating, but taking that first step is worth it. Stick with me and you'll walk away with the knowledge to trade confidently and strategically. Okay, let's get started. Choosing a brokerage. The first thing you need to trade stocks is a brokerage account. Brokerages are companies that facilitate stock trades. Some top brokerages for beginners are Fidelity, Charles Schwab and TD Ameritrade. They offer great educational resources for first-time investors. When comparing brokerages, consider account minimums, trade commissions and investment choices. I personally use Fidelity. I like that there's no minimum to open an account, over 3,000 no transaction fee mutual funds and great starter videos explaining how to trade. Finding the right brokerage is crucial, so research thoroughly before deciding. Opening your account. Opening a brokerage account is easy once you pick a provider. The application asks for your personal and contact information. You'll also need to enter your social security number for tax purposes. The approval process takes just a few business days usually. Once approved, you'll get login details to access your account online. Now you officially have a trading account. Up next, it's time to fund it. Funding your account. To buy stocks you need money in your account for purchases. Most brokerages will allow you to link your bank account to seamlessly transfer funds. Once connected, you can move money from your bank to your trading account and back. Generally, there are no fees to transfer money. Another option is wiring money, but often there's a wire receipt fee. I prefer linking my bank account to avoid fees. However you choose to fund it, be sure there's enough in your account to cover trades plus a little extra. Now let's get to the good stuff: picking stocks. Researching and choosing stocks. The most vital part of investing is choosing stocks. Although it may seem random to beginners, smart investors base picks on research and analysis. Your brokerage likely has screeners to filter stocks by performance, industry, management team and more. I like to look for companies with strong financials and potential for explosive growth. Make a list of 3-5 stocks catching your interest right now. Here are my top stocks for new investors: Apple, Disney, Microsoft, Nike and Starbucks. Consider adding companies you personally know and like. Familiarity helps early on. Spend time learning about prospects before buying shares. Get to know long-term vision, products, leadership team and competition. The companies you truly understand are easiest to follow and invest in. Placing your first trade. You've researched your stocks, funded your account and now you're ready to pull the trigger on your first trade. In your account, search for stocks you want to buy and input share quantity. Double-check ticker symbols so you buy the correct stock. Review order type. Usually limit or market orders are best for beginners. Limit orders only execute under the price you define. Market orders buy at the ongoing market price. Once everything looks good, complete your order. And congrats, you just bought your first stock. Take a minute to reflect on this investment milestone. Trading stocks for the first time is seriously momentous. Now it's time to monitor your purchase and learn as an investor. Tracking your stocks. Get in the habit of checking your stocks daily, but don't panic over minor daily dips. Zoom out and look at long-term 5-year returns to gauge performance. Set up price movement alerts through your brokerage so you stay informed. Follow financial news sites like Bloomberg and MarketWatch to see what impacts your holdings. Sign up for investor emails from the companies you own. This gives you an insider look at new products, leadership changes and company filings. Tracking your stocks engages you as an owner and educates you for future trades. Be patient as you learn the market's ebbs and flows. Investing rewards those with long-term outlooks who intelligently weather temporary drops. Now let's talk about selling strategies. Selling your stocks. Knowing the right times to sell is just as important as buying. Common starter sell triggers are hitting a target price or losing 10–20% on your trade. I usually sell in batches instead of dumping my full position at once in case stocks rebound. Other investor excuses to sell are losing faith in leadership or disliking a company's future outlook. Selling works very similarly to buying. Queue up your sale order, double-check details and submit. Proceeds from sales should hit your account within a few business days. Remember, you're taxed on investment returns, so keep records of buys, sells and gains. And that wraps up trading basics for investing first-timers. Recap and conclusion. Let's recap what we learned today. Choose an established, affordable brokerage like Fidelity or Charles Schwab. Open your account and fund it via your bank. Research companies thoroughly before investing. Buy your first shares through a market or limit order. Actively track stock performance using alerts and financial sites. Sell batches of shares when you hit target valuations or lose faith in prospects. Investing does take research and patience, but pays off for those in it for the long game. I hope this overview equipped you to start trading with knowledge and habits for success. As with any skill, investing improves through practice. Stay determined through ups and downs by focusing on long-term goals over daily fluctuations. Thanks for watching and happy investing.